Let's start with a situation called rally base rally. I will mark this area, then we see a movement upward, after which consolidation occurs, otherwise known as sideways movement. After which the price continues to go up. To open a position, you need to wait for the price to reach our area again, and only then can you make an entry for an upward movement, which is basically what I did. Such situations happen quite often, and every hour on any currency pair you can find several good examples to work with. Currently, each candlestick you see on my chart lasts 1 minute because I am using a 1 minute time frame. In this situation for this pattern, you should use time frames of 1, 3 or 5 minutes. In these time frames you will encounter such situations much more often, and they will work very well. Your main task is to visually identify this pattern and correctly draw the area from which the price should bounce. For example, in my situation right now, there has been a sudden consolidation after a sharp increase, and it may consist of 5, 10 or more candlesticks. Most of them can be short, and what is important is that after a prolonged rise or fall, such sideways movement occurs. If a candlestick enters this zone for the second time, it is very important that you confidently enter the trade. You also need to choose the time for your entry, and this depends on the situation. In my case, the sideways movement did not last long, so I chose an expiration time of 3 minutes. If this lasted longer, I would also increase the expiration time. In general, your task is to analyze the situation you are in, determine the duration of the consolidation, and choose an average suitable time with a buffer of a few minutes. I want each of you to understand that there is nothing complicated about this. You just need to assess the situation, as shown in the pictures, draw the area, and open a trade at a good entry point. By the way, my trade is closing in profit, and my balance is already $278. Moving on to the next entry. I will make the next entry on the currency pair, Australian dollar to Swiss franc. The expiration time is 2 minutes. The direction is upward. The entry amount differs from the previous one and is $50. And here's why. We see a strong support zone that the price has repeatedly tested, which allows us to assume a fairly high strength. We also notice several long shadows, indicating the ineffectiveness of sellers. In other words, they had the desire to push the price, but they lacked the strength to carry out the grand plan. Just above, we see a weak resistance zone that the price is likely to aim for. But we also do not forget about the shadows and the seller's opportunities for another attempt at a breakout. Therefore, I entered the trade with $50, and in the worst case, I will take a hedge. For those who do not know, support and resistance zones are key points on the chart where the price tends to stop and reverse, but breakouts can also occur. Such zones can be identified by analyzing the chart to find the most frequent sharp reversals. Additionally, high volumes at certain levels confirm their significance. For example, if the trading volume significantly increases when approaching a certain zone, it may indicate strong support or resistance. Round numbers such as 50, 100, 500, 1000, etc. often become important levels. People tend to react to such numbers, creating additional levels of supply and demand. These levels arise on any time frame, whether it be minute, hourly, daily or weekly charts. The larger the time frame, the more significant the zone. For example, a zone marked on a daily chart will have more importance than one on a minute chart. One of the simplest ways to use this is to buy in support zones and of course sell in resistance zones. But do not forget to look for confirming signals such as candlestick patterns, overall price movement potential, divergence, etc. Also don't forget that false breakouts can occur when the price moves beyond the zone but then quickly returns. This can be a good signal for a reversal. I briefly touched on the fundamental concepts that every trader should master. If we delve into more detail, the video turned out to be very long. Here, I want to demonstrate the possibility of applying the theoretical knowledge presented in my guide to real examples. By the way, another trade is closing with a good profit. But I think that the price still has huge potential for upward movement. Let's switch to a 1 minute time frame so I can quickly assess the situation and the possible developments. Okay, so. Alright, let's switch to the 10-second time frame and place a trade. I chose this time frame to track the market dynamically because I feel that the price might still correct a bit and I may have to take a hedge. In general, let's not make predictions. Let's wait for the end of our trade. As I expected, there was a slight correction, but it's nothing serious. Let's increase the entry amount and go for a rise once again. The trade is closed and I receive a plus of $120 to the bank. Considering this is a rollover, the net profit is around $70. Let's go back to the 5-minute chart and assess the situation. We see that a candlestick pattern called the inverted hammer has formed, which further signals that the support zone is indeed strong and the price is likely to go up. But let's consider another situation. I am entering the currency pair AUD/USD, and let me explain in more detail the logic behind my entry and why I decided to go short. Let's mark a small area for drawing and select a straight line to indicate the upper and lower boundaries of the channel. Let's count together how many times the price has bounced off these lines. 1, 2, 3, 4, 5, 6, and the anticipated 7th time. To make it even clearer, I will highlight the points of contact with red circles, which could serve as entry points with other confirming patterns. We also see the overall potential for movement directed downward. And if we look to the left, we notice a resistance zone from which the price has repeatedly rejected. Considering all these points, one can assume further downward movement. But the price went up anyway, despite all the indications of a short movement. What should be done? First of all, there is no need to worry, as false breakouts often occur and the price can return to the channel. The next step is to determine the best point for covering. In my case, it is the next resistance zone, from which the price is most likely to go down. Next, it is necessary to switch to a smaller time frame to not miss the best moment to enter, as well as to prepare the amount in advance for covering. The trade ultimately closes at a loss and I take a cover at the best points. Let's wait for the result. I am getting a good profit, but I don't want to stop at what I've achieved. I still feel that the price should go down even lower. Therefore, we switch back to the 5-minute chart and notice that the price has returned to the channel. I again set the amount to $50 and enter a downward position. Another win, but this time it was more luck than a well thought out calculation. I am increasing the expiration time and going for a decline. Why did I increase the time? I will explain that a bit later. The trade closes with a return, and I am absolutely not satisfied with that. Let's go back to the 5-minute chart and reassess the situation. We see that the price is still within the channel, and we also notice that a candlestick pattern, the shooting star, has formed, which is an additional signal for a downward movement. In trading by any means, unpredictable moments occur, so you must strictly adhere to the risk management rule and under no circumstances allow emotions to dominate during trading. All these skills are acquired exclusively through practice, but don't forget about rest. Everything should be in balance both in life and in trading. In this video, I want to show a small part of what technical analysis is capable of. That is why I am confident that the price will go down 100%. I repeat, the price will go down. We are simply observing a prolonged correction. For this reason, I have increased the expiration time. Let's switch to a dynamic time frame and wait for the result. I am getting a net profit, and this is already the 5th trade on this currency pair. Of course, there is still an opportunity to earn here, but let's move on to the next situation. AUD/USD, a similar picture but in the opposite direction. Let me enter the trade and explain all the nuances in more detail. I will again note the 2 channel lines that constrain our price. We also see a pronounced trend, and the price is bouncing off the channel boundaries, and I anticipate further movement. But let's not forget that this analysis is based on a 1-minute chart. In such situations, it is necessary to determine where the price might go. Therefore, we switch to the hourly chart to identify the target. Also, no identifying concepts. In that case, we switch to a higher time frame. Here we already notice something interesting, namely the presence of a support zone and a resistance zone. It can be said that the price is moving in a channel that is sideways. As in the first situation, we see a long shadow indicating an attempt to push the price down, which was unsuccessful, and buyers took control. Considering all this, one can assume the final goal. Let's return to the dynamic time frame and wait for the result. The price is moving up and I am taking 43 as let's move on. My next entry will be with the euro and yen currency pair. I will increase the entry amount to $150 and enter a downward position. I will mark a small area for drawing and choose a straight line that will indicate the price movement. Here we see a clearly defined figure called head and shoulders, which consists of the left shoulder, head, right shoulder, and the neck itself. In this pattern, the price will tend to break through the neck area for further downward movement. It usually occurs in an uptrend, but with rare exceptions, it can also be observed on a downtrend chart. Such a model is better considered in conjunction with other indicators, such as trading volumes, candlestick patterns, trend lines, and indicators, for example, RSI or stochastic. And don't forget about external factors. Due to strong news or major players, the graphic pattern may break. I am taking profit. My balance is already $714. For this currency pair, I will make a trade to go long. It's all quite simple here. The price is moving within this range, and we see two graphic patterns called bearish flags. We notice a false breakout, but it's not a big deal. The price touched the lower boundary twice, which is not enough for a breakout, so I assume it will rise. This and other graphic models are compiled in my brief guide, which all partners receive absolutely free. So if you wish to develop and work in the same team, you can click the link below and send me a personal message. In the meantime, let's wait for the results. I get another good profit, and let's make the final trade. USD is one of the most popular pairs in the currency market, known for its high volatility and its contradictions. This is where I will make my final trade for an increase. Why exactly upwards? Let's figure it out. We observe a channel in which the price is moving, as well as a strong support zone that the price has tested multiple times. At the same time, we notice the consolidation area before the breakout, which also indicates a high potential for our zone, but the breakout happened and the price went up. Now it is making 3 tests, and I think it makes the most sense to enter a long position, which is exactly what I did. The price did not go according to our scenario, but I am confident in my analysis, so by putting up my entire balance, I am entering the trade. I do not recommend anyone to do the same. My action is a result of my experience and observation. In any other case, I would have increased the amount by 2.5 or 3 times, waited for better points and entered. But now, let's wait for the final deal to conclude. Almost 2 trades closed in profit, and my balance shows a figure of $1,500, while I started with only $200. I did not use any supernatural techniques. I worked with the most basic methods of technical analysis that I compiled in my guide. Each of you can do just as well. The main thing is to learn to distinguish these patterns on the chart. I also want to remind you that we have a Telegram channel where I conduct 2 trading sessions every day, share useful tips, some moments from my life, answer any questions of interest, and much more. I will leave all the links in the description. A new strategy will be released very soon, so give a thumbs up if you're looking forward to it. Sending hugs to everyone. See you soon.